Conversations That Matter is a partner program for the Centre for Dialogue at Simon Fraser University. The production of this program is made possible thanks to the support of the following and viewers like you.
Pam McDonald, welcome.
Thank you.
People want to invest money. They want to see their savings grow. They want to find some way to get ahead of the financial curve. And yet they go into it knowing so little about the process, where their responsibilities are, and what they can and can't ask. It's a complicated world out there. So I want to talk about that process, but I want to first of all start off with understanding what the BC Securities Commission is. Like, what's your role in all of this? And then we'll talk about the individual investor.
Okay.
And then the financial advisor.
The investment advisor, yes. Yeah, very important.
Yeah.
The BC Securities Commission is an independent provincial government agency, and we are essentially responsible for regulating the investment business in British Columbia. And a key part of that, a key part of our mandate, is protecting investors. And we take that very seriously, and we do it in a number of ways. So we license and we oversee the people who deal in investments, like a stockbroker, for example. We make and enforce their rules of conduct, and we educate investors so that they can make, educated, empowered, and informed decisions about their investing health. And so we really care about the relationship. As a regulator, we really care about the relationship between investment advisors and their clients, ordinary people like you and me and the people watching this program. And as an educator, what we really try to do is find interesting ways to engage people so that they can get the information that they need to try and make these good investment decisions.
Well, I think that making it interesting must be the most challenging part of it all, because I think that many people are like me. I look at this and go, okay, it's a page with a bunch of numbers on it and a whole bunch of fine print, and I have no idea what it means. And that's if I'm dealing just with an investment advisor, let alone investing in, let's say, a private or public venture.
Right.
I have no idea what I'm doing. Right. So how can you make that interesting? What are some of the things that you're doing?
Well, we've done a number of things. So, for example, most recently we do a lot of research, and we do a lot of research to help us understand in the attitudes and beliefs of the investing public. And through that research and our understanding of their attitudes and beliefs, we develop sort of public awareness campaigns to help people learn more about themselves and about investing. And so most recently we launched a piece of research last year. It was a national piece of research, and we really looked closely into the relationship between investment advisors and their clients. And we found, and this is something that behavioral economists are doing a lot of work in now, we found that your personality really does matter when it comes to investing. So depending on what kind of personality...
Your personality matters.
Your personality matters. And depending on what personality type you have could depend on your investing behavior and the kind of relationship that you have with your investment advisor.
So when you say personality, are you talking about, like, am I risk adverse, or do I have a risk tolerance?
No,
or is it more than that?
So these behavioral economists have identified 5 distinct personality types. They are confident, diligent, reserved, impulsive, and tumultuous. So as a regulator, as I said, we really care about certain things. We care that you understand about fees and compensation. We care that you understand about how your portfolio is performing. We care that you understand or that you know whether your investment advisor is registered or not, and say what they're registered to sell you in terms of products. And depending on what your personality type is, you might know more or less about these things. So if you're a confident investor, you're a person that's quite likely to ask how your investment advisor is compensated. And you're probably likely to read those monthly statements you get from your investment advisor. If you are...
So let me stop you for just 1 second. Is it important to ask your investment advisor how they're compensated?
Absolutely.
But isn't that, the fee structure that they set up, and that's the way that it goes, or how does that work?
Oh, no. Fees vary. They vary enormously. So If you're buying a stock from your investment advisor, there might be a commission, but that might vary. So it's important to understand how that commission works, what kind of commission you're paying. And
are you paying on the buying and the selling, or do you only pay on one, not the other?
that's right.
Okay.
That's an important question to ask. How is your investment advisor being compensated out of that? How much are they being paid? How much is going to your firm? Mutual funds are much more complicated. So there can be various types of fees associated with purchasing a mutual fund. So you buy a mutual fund, you should ask your investment advisor how they're being compensated. Is the firm being compensated as well? What kinds of fees are actually being paid to the company that is managing the fund? So your investment advisor is not managing the fund, but there is a company that is managing that fund and many others.
And so there's a fee that's going to come out of your portfolio that's going to cover that cost as well.
That's correct. And there might be other fees as well. And so it's very complicated, and I think the main message here is to understand that the fees and compensation that you pay impact the overall return on your investments. And particularly in today's economic environment, if you might be making 4% on your investments over a 5-year average right now, maybe 2% of that is going to fees, perhaps more. I don't know, but you should know.
So your 4% isn't 4% any longer.
Your 4% is not 4%. So you need to understand the fees that you're paying and how they impact the overall return on your investment. Really important, number one message.
So a confident investor is somebody who's willing to say, okay, I want to know this.
That's right.
And are you saying that the other types of investors are going to be more reluctant or may not ask it at all?
So let me tell you, an impulsive person, these are personality types that are agreeable, and perhaps not so conscientious. And this is the personality type that is most likely never to ask about fees and compensation and never to look at the performance of their portfolio. Yes. If you're tumultuous, you're the sort of person that never makes an investment, but as a result, when you do, you're the personality type that is most likely to be impacted by investment fraud. And that is the worst thing that can ever happen to you.
What makes a tumultuous person like the most likely to be impacted by investment fraud?
Because they typically don't invest. And so if they don't invest, they don't ask questions, they don't know about fees, they don't know about performance, they just don't have a good general knowledge base about the investment industry and what's good for them, what's their risk tolerance, what's suitable for them. All the important questions that you need to be asking your investment advisor.
I got to get you to hang on for just a second before we get back to this exciting topic. We'll be back in just a moment.
Conversations That Matter is a not-for-profit program made possible thanks to the charitable support of the following and from viewers like you. Please visit conversationsthatmatter.tv and help us to continue to produce this program.
So you bring up the topic of fraud, and I can't help but think of the stories that we've read about, and a couple of them out of Victoria. I'm thinking, what is it about Victoria? But it's not just there. Well, maybe it is, because there are an awful... Okay, as I'm posing the question, I'm thinking, okay, I've moved there, I'm retired, I don't think that I've got enough in my investment portfolio. I need to make sure that I've got enough money to get through to the end of life. And so then maybe I up the risk tolerance. How do you, though, you go to somebody, you think that they're with a legitimate firm, you give them your money, and then you learn that it only went into their bank account. And how do you know, how do you prove or have the evidence that says, no, this is my asset and there it is?
Just let me talk about Victoria for a moment.
Okay.
Because, yes, I mean, a lot of fraud has taken place in Victoria because of the large number of retirees. And so this is a group of people that has, accumulated a lot of money, and it's their retirement income. And that is a community of people that fraudsters go after. And what's very sad and can be often tragic is that retirees lose a lot of their retirement money, and they can likely never go back into the workforce and make it up. And so it's gone. It's gone, and that is a devastating impact of fraud, and we see it all the time.
There's a part of anybody who thinks, well, by the time you got to that age, haven't you acquired enough experience not to trust people quite the same way, but clearly not.
No, not. And just before we go on to the warning signs of fraud, there's another group of people, and that's the boomers. And this is a group of people that has accumulated a lot of wealth, and that's like hitting the jackpot for a fraudster. And so they're a target audience as well. And that's why we, as an organization, have developed a campaign called the Be Fraud Aware campaign, and we target those specific audiences, sort of 45 plus. But there are warning signs of fraud, and the first one that's probably the most prevalent, is somebody coming to you and giving you an investment opportunity that is a very high return, and they say it's guaranteed. So no investment is ever guaranteed, and if somebody says that to you, that should be a big red flag. But if they offer you even 10%, again, in today's market,
That's an extraordinary return.
It is an extraordinary return. So if somebody says high return and no risk, you should take stock.
Do not walk, run.
No, that's right,
Okay,
run.
yeah.
The other one is, it's offshore and tax-free. No investment is tax-free.
Right.
Right.
Well, if you're doing that, you're breaking the law.
You're breaking the law.
Yeah.
That's correct.
Yeah.
The other one would be, you've got to get in now. It's only going to be available another 2 or 3 days. Don't ever feel pressured by that. The best investment you might ever make is the one that you don't make.
Yes, I've learned that when somebody tells me you have to give me an answer now, I say, well, then the answer is no.
The answer is no.
And they go, but why? And
Yeah.
I go, because you're not giving me enough time to make a reasoned decision.
Yeah.
And if the pressure's on to do that, I think that the scales are tipping in your favor, and that it's not necessarily going to work for me.
And that's right, and it is
Yeah.
tipping in their favor. So be very cautious. Take time, as I say. Don't invest if you feel pressured. Another sign would be someone coming to you and saying, this is an investment that is open only to a very small group of people. So profit like the pros. Be very cautious.
But we know that in early stage financing, when companies are first getting going, that investment opportunity is available only to a limited number of people, because that's the class under which they're raising money. And that's
right.
a different situation, isn't it?
And that's different.
And it's regulated.
And it's regulated,
Okay.
but that's where it's important for you as an investor to understand the questions that you should be asking and the research that you would be doing. And that's what we want people to do. And then you empower yourself. You make smarter, more informed, knowledgeable decisions.
Right, and so you can see why somebody might be confused, going, but I've heard of these vehicles, and so it may make sense. But what you think makes sense may not necessarily be the reality of the situation that you're in.
Exactly.
Yeah.
Yeah.
This is our second commercial break. We'll be back in a minute.
Conversations That Matter is a not-for-profit program made possible thanks to the charitable support of the following and from viewers like you. Please visit conversationsthatmatter.tv and help us to continue to produce this program.
And the other thing with respect to fraud is somebody coming to you that's involved in a group. It's say your family or friends. And what fraudsters will often do is they will infiltrate groups like an investment club or
A
a
book
church
club or a church
or an ethnic group. And I can give you the case of a woman named Rashida Samji.
Yes.
This was the biggest fraud case that was ever reviewed by the BC Securities Commission. It was always also the biggest fine that was ever imposed by us. So she had a Ponzi scheme, and a Ponzi scheme is a scheme where the investments of new investors are paid to existing investors until there are no more investors and the scheme collapses.
Yeah.
So she defrauded about 200 British Columbians. The scheme was valued at about $110 million.
$110 million
that was defrauded. We could trace $99 million of that went to returns, but there was never any investment. So this was money that she paid as returns to existing investors. $11 million was never accounted for.
which you think, okay, somehow it ended up in her bank account.
You might come to that conclusion.
Yeah.
And yes, she was fined $33 million by the BC Securities Commission.
$33 million.
Right.
Did she pay?
Yeah. Well, we do everything that we can to secure funds for investors. But here is where we also say that when you suspect investment fraud, what we want people to do is to be able to understand those 5 warning signs I talked about, say no to them, reject them, and report them. And the sooner we hear about potential fraudulent scams, the sooner that we can investigate them, and the increasing chance there is of us being able to get money back to you. But the longer it goes before we have information or before the reporting happens, the more time there is for somebody to do something else with the money.
So when I think of the two high-profile cases that were in the Victoria area, we're talking about two men who had a pretty high profile, one through his radio show and the other by being at virtually every charitable event that you can be, and I'm going to give 100,000 here and 50,000, and people are going, holy smokes, what a generous guy, pillar of the society. But what then becomes, so you're going, well, that has to be a trusted individual. Look at who they associate with. What then become the warning signs once you're into it that you start to say, I think something's not right?
Well, I'll tell you that what people should always do, first and foremost, is find out if your investment advisor is registered. In the case of one of the people you're referring to in Victoria, he was not registered.
It wasn't even registered?
No. So you should find out, is your investment advisor registered? What are they registered to sell you? And you can also find out, if perhaps your investment advisor has been the subject of any disciplinary action.
How do you do that?
You can do that through our investor education website, which is investright.org.
So you can do it right online?
You can do it right online, or you can go to the website of the Canadian Securities Administrators. And you can find out, is your investment advisor registered? What are they licensed to sell you? And as I say, if perhaps they've had any disciplinary action. And that's the first thing you should do. And if your investment advisor is not registered, you should question whether you want to get involved with them.
Right away?
Right away.
So what happens when you start to ask for the evidence or the statements that back up what your supposed investment is into, and you get put off or you're not given direct answers? Is that another warning sign that you may be in trouble?
And that is a warning sign that you might be in trouble. And that's something that you should report to the BC Securities Commission immediately.
Do people report enough?
No. No, they report, but often, as I say, it's too late. And sometimes this is very personal, and people, there's an embarrassment.
Some shame,
and some shame, and they would rather not talk about it. And that's why through our public awareness campaigns, we hope to, people can shed some of that and come to us. We want to hear from you.
It's truly fascinating and very complicated, but I got to get you to hang on for just one last commercial break. We'll be back in just a moment.
Conversations That Matter is a not-for-profit program made possible thanks to the charitable support of the following and from viewers like you. Please visit conversationsthatmatter.tv and help us to continue to produce this program.
So what kind of teeth do you actually have, though, to help somebody either get their money back or to discipline somebody? You say that you fine them, but can they be charged criminally? And do you play a role as the Securities Commission in helping to facilitate that?
Things can be referred criminally, yes, and we can facilitate that. And so we have a process whereby when we proceed with an investigation, we publish a notice of hearing, we go through a tribunal process, we come to a decision, our commissioners come to a decision, and then after that there is a sanctions decision. So if we find for fraud, we sanction for that. And if need be, we can refer to a criminal process.
So how does somebody start the process? Does it have to start with a written formal complaint?
It comes in the form of a complaint, yes.
Yeah.
And then we investigate it. And then when we amass enough information, as I say, we start the process more formally.
But seeing as fraudsters already have shown a disregard for the law, and they're operating outside of the rules that we hope that they would function in, what other vehicles do you have available to you to prevent them from continuing to draw in other victims?
Really, public education. Educating people is your best defense. Understand what the warning signs are, learn to say no to them, learn that you have time, understand the questions that you need to ask and the research that you need to do. You've spent all your life, saving for your retirement. ask those questions, do that research, take the ownership. We're certainly not saying that your investment advisor doesn't have a responsibility, but you want to have a really engaged and informed relationship with that investment advisor.
So when I think about it, I went through the school system and I've lived most of my life sort of building my own expertise. I have never sat down and figured out how the investment sector works. Where do I go to learn that? So other than saying, okay, I'm going to trust you to manage my investments, you help me through the process, where do I go and find it out for myself?
I would say to go to our website.
Yeah.
I would go to investright.org, and there is a wealth of information there about, investing basics, about the kinds of investments, about the questions that you should be asking your investment advisor, about the responsibilities that your investment advisor has, towards you, about the warning signs of fraud. Go to our website. There's other sources as well, but I would suggest going to our website.
How important is it that we also take a look at the educational credentials of our financial advisor? Like I hear about, well, I'm a financial advisor, I have a business administration degree. What's the difference between somebody who's there versus having like a CFA?
Well, there are many, many different titles.
Yeah.
But again, it goes back to registration. You should use a person who is registered, who has gone through a registration process, an education process, and that is qualified and licensed to sell you a particular product.
So if I have an advisor that is a certified financial analyst, which is a worldwide organization, is it not?
It is.
Yeah.
But are they registered? And that's
even
different.
more so.
Even more so. That is different from having that CFA designation. Are you registered? And as a CFA, what are you registered to sell me?
So it's important to do your homework.
Do your homework.
Be cautious.
Be cautious. Yeah. Be engaged.
Ask a lot of questions.
Ask a lot of questions. Be engaged.
And don't be afraid to refer to the BC Securities Commission, because I'm sure that a lot of people go, oh, well, it was my own foolishness that put me in this position. But also make sure that the appropriate authorities are aware of what might be a potential problem.
Do exactly that. We welcome it. We want to help.
Because we are talking about our money and the well-being of our future, especially as we age.
Our future, maybe our children's futures as well.
Yeah. Thanks for coming in and doing this.
My pleasure, Stu. Thank you.
Thank you.